Good afternoon, everybody. Good afternoon, Danny, Momo, Fletch, Mark, Robert, Varu, Wild Rift. Good name. Paul, good afternoon, noble people. Afternoon, Cell Trader. How are we doing? It's Friday the 13th. So far, nothing's gone wrong today. So far. So, yeah, we'll see what happens. It is Friday the 13th, so highly likely something's going to go wrong in it. 125 ADR on US dollar yen. So if you weren't in the stream this morning, morning monkey, afternoon even, if you weren't in the stream this morning, obviously it's all kicked off. So, sorry, I was doing some analysis. Change everything. Where am I? Where do I live? What's going on? There we are. So 3 o'clock, we've got the University of Michigan, which comes out in half an hour. But obviously, it's all kicked off this overnight, basically, with Iran being attacked by Israel. There's stuff going on constantly. The feed keeps popping up with something or other to do with this. Obviously, it's a massive escalation. Iran have basically seen this as a declaration of war. So it's all going to kick off. The safe haven runs have obviously happened. So I can't really tell by that one. Let's look at another Swiss. That's oil. Let's look at a Swiss that isn't related. So we had the big safe haven run. Afternoon, David. Oh, thank you very much, David, towards some boxes to help move. They're being delivered today. Thank you very much for that $10 tip. Yes, it will be delivered today, my boxes. So I'm moving house and yes, got to start the moving process, which involves boxes, lots of boxes, and bubble wrap, which is always good fun because you get the bubble wrap and you just sit there just going for about an hour, and then you realise you've blown all your bubble wrap and you have to buy more. That's what I did last time. Anyway. Thank you very much for that, David. Much appreciated. That Naz is up to something, is it? Oh, yeah, so it is. That's the opening candle. Big one. Yeah, wow. So, yeah, upshot at the moment is, afternoon, Sebastian. The markets are going to be all over the place because obviously in times of conflict, we have safe haven runs. Safe haven runs involve the Swiss franc and the yen. So far today, it's an odd one. We had the initial safe haven run. Just getting around for my pen, which has obviously decided to go to a different part of the desk again. Screen even. So there's your safe haven run. The vast majority of the runs so far seem to have been undone. So if you look at all the yen pairs and all the Swiss pairs, it's pretty much mean reverted the whole thing. I can't believe that this is the end of that run because this Israel have said they're going to continue this bombardment for days. Iran are obviously going to hit back. This is starting a major conflict in that region, similar to when we kicked off with Russia and Ukraine. I can't believe that is the end of the safe haven run. We've got a weekend coming up. A lot's going to happen over this weekend. The market's not going to want its currency in stocks, surely. So this is a great buyback, a pullback short, as far as I can see it at the moment. I've shorted. I can't even talk today. I've shorted the US dollar Swiss. Sorry, I haven't. I've shorted the Euro Swiss. I got out of the Euro Swiss today, that position, which I've been in for a week. I've added it back on again because I can't believe we're not going to get a second leg on this. But maybe I'm wrong. I don't know. But usually this tends to be a much bigger, faster move over multiple days. So we'll see what happens. The stock indices at the minute are quite mad. Obviously, if you look at the main indices, we've had a big, strong Globex move. Let's get it on this chart because obviously you can see the ADRs then. Obviously, ADR dashboard lit up like a Christmas tree. We had 200 ADRs this morning in the live room before we'd even opened the market. So all the Swiss franc pairs, obviously 200 ADR is indicative of a safe haven run. But you look at the US indices at the minute, obviously we gapped down because this all kicked off around about midnight. Market was shut during the Globex swap over and bang, there we go. So huge drop down. It's come straight back down into weekly support resistance. This is your, I think this is your 2-week high. Yeah, 2-week high. So there's your 2-week high. Yeah, very respectful at the moment. So that was where we stopped. So there's masses of buyers and sellers in this region. We came straight down into it and bounced straight off again. But I cannot believe this is the end of this. They are going to want to surely scale out of stocks before the weekend in case it escalates. The US gets dragged into it in any shape or form over the weekend, or Trump comes out and gives support for Israel from a troop perspective, or Iran does something which really smashes Israel and everyone has to get involved in it. The stock market is going to gap down like a lunatic on Monday. Obviously, there's no trading over the weekend. So this is a very odd move going long here, because you would expect the market to want to sell off hard. So we've got exactly the same situation in the S&P at the moment. We've come back up to the gap, the gap open basically, tapped into the Globex open. So for me, I would suggest that's probably the most likely move today. But I don't know. I wouldn't have expected the V-shaped recovery on the safe haven runs, but it's happened. So we'll see what happens. Dow Jones, obviously, not always weaker. The industrial stocks are always weaker in their movement. So the gap is, pretty much the same. We've got a gap down scenario, but obviously the pullback nowhere near as strong on that. So the other thing that's happened, obviously, this morning, which we covered, is oil. Did anybody get into that this morning when I said to long this? Look at it. Go and watch this morning's live stream and watch me paint that candle before it is even painted. I painted that exact candle. God, I've got the old crystal ball out today. Where's oil? Let's find oil. How the hell am I going to find oil in this lot? I can't remember when I was talking about it. I covered it somewhere anyway. But I drew the exact pattern this morning that oil has done, which is really bizarre. I'm not going to find it because there's hours and hours of stuff. Oh, here we are. Look, there we are. Let me see if we can find my exact drawing of it. Anyway, what I did was I drew the next candle as a 3-bar reversal. It's done exactly that. Good, eh? But anyway, I must have been a different part of the stream. I don't. Go and watch it if you want to. So, yeah, this is, I said, if we get that 3-bar reversal, I said, this is exactly, it was at this point, basically, I said, this is exactly where you want to get in, because this is a pull, a pause. And this candle here, we were about there. And I said, this is exactly the spot that you want to get into. If this is going to turn into a 3-bar reversal, they're going to run those highs and we're off. And obviously it did exactly what I drew. I drew that candle pretty much like that. And I said the alternative is to close above that high, and that would be an incredibly strong signal for a continuation hold. It hasn't really got very far. You've put in actually a 3-bar reversal short there, but obviously we're in that sort of move. So if you go back and look at Ukraine, yeah, when wars kick off, oil price goes through the roof. So what we tend to get is either disruption in oil production, disruption in oil delivery, or excess usage of oil and petroleum in conflict. Obviously, all tanks, planes, everything that you use in the military all runs on petrol. Petrol's made from oil, oil price through the roof. Yeah. OPEC have just put production caps on as well. So that's basically what happened when the Ukraine crisis happened. This is day one of potential the second Middle East conflict, or however many Middle East conflicts we've had. But look at where we are and look at where we can potentially go to on an oil spike. Yeah. So I don't see any reason why within the next 12 months, if this escalates, if this kicks off, and if everybody gets involved in it, we're not going to be up there on oil. So this is the start. This is where you get in on this move. But as I say, the markets at the moment are not doing what I would expect them to do in this type of scenario. You would expect in a safe haven run environment, the stock markets to come down hard. They are really struggling to get through that high today. So we'll see where we go. No trade on the NASDAQ. Ranges are too small. Oh, no, too big. Yeah, the range is too big on the NASDAQ to trade today. Got a trade on the Dow, the S&P. Dow's too big as well. So there's not going to be any trades today. It's too violent. S&P will get on. That's the only thing that is potentially going to trade today. But yeah, I mean, it looks bullish, doesn't it? Weird. Very weird. Anyway, sorry, I got my coffee. I didn't drink it. So we do break that high. The obvious move is the gap run today. You're going to look at half an ADR movement to get there. We've already done one ADR, so you're looking at a 1.5 ADR day, which is obviously achievable, especially in situations like this. Bear in mind, everything has moved dramatically today already. So it could be that we're going to use Michigan today to drive that initial movement, whichever way we're going to go. So we've got roughly quarter of an hour until University of Michigan figures come out. So depending on obviously what they come out at, the market will find it easy or hard to use that to move to where they want to go to. But bear in mind, we've had nothing but negative all week. So the dollar this week has had nothing but negative news events coming through. So it's not looking great for the dollar. Obviously, with oil prices going through the roof, that is going to drive the dollar up because obviously the dollar is an oil producer as well, or the US is an oil producer, and Canada. So if you look at the moves that we've had this morning, yeah, very strong US dollar, and it is continuing to be fairly strong and holding. We've had very strong Canadian dollar. Yeah, so all this is to do with oil, basically. They are large oil producers and exporters. So obviously, those are going to benefit from the oil price rising. However, the US dollar is very, very weak at the moment. So you can see that by the US dollar CAD. That has not hit ADR because you've got a strong currency against a strong currency based on oil movement, and they both do that. So as soon as the oil move is over, expect to see that dollar come back down again. So things like the pound US dollar quite possibly will rebound up there fairly easily if that dollar comes out in negative news. So this Michigan figure today, very important because if it comes out as a negative, we're going to see the dollar go potentially. So obviously now we've got Trump talking about how much he loved, I can't remember what the actual wording was, but he thought it was an amazing or tremendous. Let's have a look for tremendous. That's his favorite, isn't it? Scroll back a little bit. No, it wasn't tremendous. Was it spectacular? No. Can't remember what it was he said. Some word he used, and I just read it and went, "You idiot." But anyway, but he said basically it was amazing. The attack from Israel was amazing. Yeah. So fully supportive of it, obviously. So we've got to be a little careful because this could blow up very, 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 very quick. Would you say that the market is scared? It firstly favors commodities, then currency, or does it favor currencies due to liquidity? When the market is scared, it favors the yen and the Swiss. So we'll get the fear and greed index in a minute. But gold, oil, Swiss, yen, they will all benefit dramatically from conflict. Dependent on what happens, stock markets will always fall on it. But where they put their money will be dependent on pricing. So when you're running a portfolio, you have multiple areas of it. You have obviously you've got commodities in there. You'll have stocks. You'll have FX. You'll have metals, and you'll have specific sector purchases as well. So you may be heavily invested in industrial, in pharma, whatever. So when a crisis hits, what benefits depends on the exposure. So if you're in a very strong greed, you'll have a lot mode. You'll have a lot of money in stocks, specifically in tech. So NASDAQ stocks, things like that. And dependent on obviously economic outlooks and what's going on in the world, you'll have a certain bias longer or shorter than others in specific FX currencies. So you might be longer than normal in the dollar or shorter than normal in the dollar at the moment. How that gets moved around by each individual bank and institution is dependent on their portfolio coverage. So you can't say for sure that one thing will benefit way more than any other thing. But what you will be sure of is that will lose out because this is high risk. You will always find that will win and oil will win most of the time. So those are the things for longer term holds that you want to look at. But this, with anything that kicks off like this today, it could be incredibly short term. It could be Israel hits them. They hit back with some drones. Iron Dome protects them. They hit back a couple of other times. Iran comes in with some cruise missiles. Tit for tat, stop. Then everything will normalize. If it blows up and it becomes a ground invasion or something, Jordan gets dragged into it because they're in the middle. Iraq speaks up and sides with Iran, or Russia's a bit busy at the minute, but China, for example, or someone else. If it escalates in that respect, metals, basically gold goes up dramatically. But this is the thing, you can never tell. You can't tell the future. If you knew what was going to happen, you'd know what to do. But it changes, and especially at the moment with Trump, he will say something different every day, doesn't he? So you can't tell is the long and short of it. I think it was excellent. Oh, is that what he said? Was it? Yeah, excellent. There we go. So there it is. Yeah. Trump tells ABC the Israeli attack on Iran was excellent. It's like Bill and Ted, isn't it? Excellent. Yeah, there's no. Anyway. Relax. Morning, afternoon, FTNet. Marco, I'm pondering whether I should position trade on the H1 or H4 chart using RSI signals. Would you say that the chances of me getting caught out on a squeeze on H1 charts is higher? Yeah. You're going to get in earlier on an H1 chart than you are on an H4. Not by a lot, though. So look at that, for example, there. So the H1 RSI extension was there. The H4 RSI extension, depend on what level you're using, but I mean, 80-20 is the ideal, was there. If you were using 70-75, it was there. So that's your entry on H1, dependent on which level you're using and what strength you require. You will find that you'll usually be one or two positions further behind on H4 than you would if you got in an H1. The downside is all those trades where you get into on H1 that take one or two positions and then you just get out of them, you'll miss all of those trading H4 because H4 won't get to an extension point. So there is there's upsides and downsides. Nothing's better than anything else. It's different. If you look at the one I banked this morning, Euro Swiss. Yeah, so this is an H1 RSI extension. So H4, I mean, very unlikely you would have got in that with the EA because it wouldn't have been extended enough to get a signal before it became unextended. So that you wouldn't have taken on H4, which was a beautiful 1 in, 2 in, straight out. Look at it on the hourly. You got extended there. Bear in mind, I'm taking these manually at the moment, the initial entries. So that would have been an automated entry. On the hourly, obviously, you're in and out. So if you're going to get into a squeeze, you're going to get squeezed anyway. Doesn't matter what time frame you get into. You may be 1 or 2 positions, trades in a position further behind, but that's about it. No breaks yet. Market does seem to be rejecting that gap down open. So we are, I mean, obviously, depending on how you look at gaps and which broker you're using, you're going to find different data, aren't you? But that's where we opened today with Globex. So that's where we're kind of rejecting at the minute. So we'll see. On the other hand, an H1 will have closer profit targets. Depends what your profit targets are. I tend to target around about an ADR regardless. So whether I get it on H4 or H1, I'm looking for an ADR's worth of movement to make money on. So you look at this exit on the Euro Swiss, average was in there. Exit is 40 pips, 1 ADR, 40.6. Obviously, I'm drawing my average in randomly because it's somewhere equidistant between the two. But yeah, that was my exit, which was 1 ADR. If you look at it on a 4-hour chart, I got in there, my average is still there, my exit is still 1 ADR. Doesn't make any difference. My exit is my exit. If you want to go for more, go for more. It's entirely up to you. If you're going to use propulsion gap targets, obviously, that's the closest propulsion gap. Funnily enough, that's exactly where I got out. But I didn't get out because of the propulsion gap. I got out because it was an ADR in movement. But obviously, if you're using propulsion targets as exits, you're going to have different targets on 4-hourly than you are on hourly. I just prefer hourly propulsion. But I mean, it's not a lot in it. The difference between the 4-hour and the hourly time frame is actually quite small if you think about it. It's 3 hours in a day in a candlestick. So it's a little slower. And now I would class it as not intraday, whereas hourly is on the verge of being top end of intraday. H4 is definitely not intraday. So if you were longing this now because there's no downside targets, that would be your target. Yeah. So if you're not going to go for an ADR, which is 40 pips, which is, it's not a lot of distance at all in ADR. But this is more of a swing target, swing trading target than a position. I mean, it's entirely up to you. There's no right or wrong. Like I say, I like ADR as a target because I know I can achieve it. And I like to be in and out as fast as I can. So I've got stuff getting banked constantly. I miss a lot of movement. I miss a lot of potential profit. But equally, I consistently bank. And that, to me, is more important than getting a home run. If I leave things for longer, I will pay more swaps. So if I was on a yen pair long, for example, I might want to leave it longer, because if I go long on the yen, my swap cost is going to be minuscule. Or they're going to pay me. Yeah. So if I went long Aussie yen, I'm getting paid $5 to hold it. If I go short, I'm being charged $17 to hold it. I want to be out as fast as I can. There's a great example here. Look. Yeah. That trade there, which was euro pound. Yeah. So I paid 136 in swaps on that. Because I held it too long. Yes, I could have targeted monthly high or propulsion. But equally, if this had then done that for another 2 weeks, I'd be paying $200 in swaps. I'd rather take some money off the table and use it to get a new position on than hope it's going to get back to there. I don't think the euro is particularly strong at the moment. I know the pound is not particularly strong at the moment, but I couldn't foresee that the pound would have really bad GDP figures and it would get creamed, which means the euro pound obviously goes up. If the GDP figures for the pound had come out as really good, we'd be down here and I'd be sitting in this even longer. Yeah. So again, it's no right or wrong. It's whatever. It's whatever it is. It's your personal choice. You can't. There's no one can ever say what is the best thing and what is the worst thing to do, because you don't know what the future holds. Everybody in Discord and Telegram groups and everything that's going buy now, sell here. This is your TP. This is that, the other. Blah 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 blah. They've got no idea where price is going. They're getting in and they're hoping someone's going to see a couple of positive trades, so they'll sign up to their signal service. That's literally what happens. No one knows where it's going. I have no idea if this is going up or down. No one does. If it's going down, I know where it's going. But if it's going up, it's going up. Yeah. So if I short this now, that's my target. But if we get one ADR and it bounces a little bit, I'd rather just take the money, because I can spend the money. I don't want to be right. I want to make money. Big difference. I'm not going to go through all the ADRs and RSIs today because it's pointless. The market's going nuts. So there's opportunities. Oh, they've all gone. There was a load of opportunities this morning, but they've all played out by those things. Well, they're not playing out, are they? They're resetting, kind of. So, all of these today are opportunities to get in, but most of them you've kind of missed. They've already happened. So this was a much bigger, faster move than I was expecting. This have got undone very, very quick, which I'm very surprised about because of the speed of what's going on. Short the S&P. There goes that rejection at the gap fill. So this is one massive propulsion gap, which is actually really a gap down, if you like. So, second leg. I think that's a bit keen today, don't you? We are going second leg. I'm going to go for a bit of a bigger win. So that's an ADR from entry. So roughly half an ADR, take a partial. If it gets there, though. Michigan's just come out. It's going to stop out. Oh, it's already stopped out. What? Well, that was quick. Spread. That was the stop loss. 5, 10, 15, 20, 25, 30. News. Let's have a quick look at the Michigan figures. 60.5, positive. That's the first positive news we've had for the week. No John Wicks today. We can have a John Wick. There he is. This is what we need. We need John Wick telling us where the market's going. How would you define the ADR target on your first entry? How would you define it? Well, an ADR is an ADR, isn't it? So if I got in here, target is 1 ADR. Sure. Target, if you're targeting movement distance, you're always targeting from your average price. So if you've got, so let's look at the euro pound. No, the euro Swiss. Yeah, that's what I mean. So I've got one short on here. So the red line is my average price because I've only got one. Yeah. So target on this to the downside from there is going to be 1 ADR, which is 40 pips in this case. There. So if this drops now by an ADR, I'm out. If it pushes up to here and a second entry goes in, my average is going to move to here, and then my target will be 1 ADR from the average. Target ADR is ADR. You can't, there's no defining it. It is an ADR. It's the average daily range. So it is whatever it is. But if you want to get in with one, and you know, this is why I don't like singles. This is why this market, this is why my P&L looks like it does this month, because the market's not moving. Yeah. So you can see on this chart how many trades I've had. So I've got in here and I've got out there. I've got in here, I've got out there. I've got in here and got out there. And now I'm in short again. These don't make any money. These little piddly straight in, straight out trades. These make a little bit more money, but these are only going to make me 0.25% because I'm risking 0.25% over 1 ADR. So if it moves 1 ADR, I make 0.25%. These, because I've got 2 trades on, when we move an ADR, make more money. So I don't like having singles on. I'd much rather be wrong on the first entry, wrong on the second entry, right on the third entry, because those 3 trades moving 1 ADR make me a hell of a lot more money than a single. Yeah, if every single one I got wrong by 3 to 4 trades, that's happy days. But in a market like this, you can't do that because it's struggling to move an ADR. Because it's dead. What's the New Zealand pair, isn't it? There's a New Zealand pair at the moment, which is the absolute definition of a range. There you go. New Zealand CAD. Yeah, I mean, from the high to the low there is 144. ADR on this is 62. So for the last month, it's moved 2 ADR. 2 times the average daily range is the maximum this thing has ever moved in the entire month. Yeah, that's the last month. That's 2 ADR. You can't really make money. All you can do is sell at the high, get out after an ADR in case it's a market structure shift to the upside. Then when you get down to the low, buy it and grab an ADR because you can't get any more than that at the moment. So the ideal is you'd want it up there. It comes up and tests that high and then it bounces off of that. You've got 2 trades on to make an ADR. More money. It's just, you know, this is absolutely perfect for a long now. Look, New Zealand CAD. Beautiful. Bullish engulfing. Sort of dodgy 3-bar reversal. It's not a very good one, but it's not the price action, it's the location. This is where the buyers are. This is where you are now. This is where the sellers are. That's where you get out. If you want to be safe, get out here. Because that is virtually guaranteed. If it's going to go long, it's going to do that. That is a variable. It's there, it's there, it's there, it's there, it's there, it's there, it's there. There's a million, there's not. There's 1, 2, 3. About 7 locations in that whole zone that you could be right with a target. If you pick the one in the middle and it picks one of these 2 to revert from, you're never going to hit target. That's guaranteed because it's got to get through that to get there. That's why I target an ADR, because you can achieve it all the time. Price moves 1 ADR regularly because that is the average price movement. So if you target ADR, you're going to hit ADR. If you target 3 ADR, you're going to find it a struggle to get 3 ADR because it only moves 1 ADR on average. It's all about targeting what you can hit. It's lovely to get in here and target that high. But what if it does this? For 1, 2, 3, 4, 5, 6, 7, 8 days. I'd rather be out tomorrow or Monday with an ADR than sit here for 8 days, absorb a load of swap costs with a chance of potentially maybe hitting it or maybe not. Take the money if it's there. This is the beauty of position trading. We don't have to be right on our entry. We can be totally wrong on our entry multiple times and still win. But if you target the ultimate exit, you're going to be wrong a lot more. And you're going to be in a lot more pain, a lot more drawdown for a lot longer. And it's not as nice as a scenario to be in. So better to get out. I'm just going to take that loss today. This is odd. It's just odd. We've done almost double ADR, double that, which is just huge. So, I mean, it's just... Today's just kind of a wipeout, and it's a Friday as well, and it's Friday the 13th, so I'm not going to push it. Be careful, the algo might be on the hunt, of course. The algo is always on the hunt, especially that algo that Mr. Huddleston invented. It's a real thing. If you trade H1 ADR reversals, so you trade H1 ADR reversals and H4 RSI. No, I just trade the market. I give strategies to allow people to follow them. When you get in is irrelevant. I trade when I think the market's going to turn, or when I think I've got an idea where the market's going, for whatever reason that may be. So normally, I have the EA set up to trade H1 RSI extensions at 75. So my normal setup is is RSI mean reversion. I've got it set to 70-30 at the moment, but I normally have 75-25 set on the hourly. But at the moment, I'm keeping my exposure tight and I'm taking trades when they look good. So I longed it there. There was no RSI extension. Yeah, so that was the first entry in that long. But it was taken because of that expectation. What I actually got was that. So as you can see, if you're trading RSI extensions on Aussie New Zealand for the last 1-2 weeks, you've had a grand total of 0 trades because it's not going anywhere. So you can wait for RSI extensions if you want to. You can take an ADR. How you get in is irrelevant, isn't it? Well, if you get in on an ADR reversal, do it. If you want to get in on an H1 extension on RSI, do it. If you want to choose CCI or MACD or stochastics, use that. If you just want to use support resistance and just short the highs, buy the lows, do that. Doesn't matter, because all this does is triggers an entry criteria. It's got nothing to do with whether you're going to make money or not. How you get into the market is irrelevant. I got into the market long there. I was wrong for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. I took a second entry, which I was wrong on for 7 days. Well, actually, I was right on that one. But I didn't take that. The EA took it. But anyway, you get the point. It doesn't matter how you get in. What matters is what happens after you get in. This is what we do. We manage the position. This is why it's called position trading. We're not about being right. We're not about using an RSI for its high strike rate. We're about using RSI for telling us that the market has moved. And as the market has moved, there is a mean reversion opportunity presenting itself. Whether you get in because ADR has been extended, whether you get in because RSI is extended, or whether you get in because it's in a range and we're at the range highs, hasn't got anything to do with it. You have to have a reason to get in. that would have been a beautiful short out of propulsion. So that could have been your reason to get in. No RSI extension. You did have an ADR extension there. So ADR on this is 40. That was 72. So that was around about 150, 160% of ADR. That was your entry. It was a 150 ADR mean reversion. Targeting 1 ADR. You'd have been out the next day. But if it had gone like that, you just turn it into a position trade. There's a million ways to get into the market. There is one strategy to get out. And that is when you've got profit. Everybody focuses and concentrates their entire trading journey on finding the strategy that gets the best strike rate, the best entry criteria, offers the biggest risk reward. It's an absolute losing strategy because I can flip a coin and be right. I can flip a coin right now and I can go long or short on this and I will be right. At some point, the market will move in my favor and I will get out. But the reason I'm getting in is because I flipped a coin. It's bang in the middle of a range, the very worst possible place you can take a trade from. Yeah, it's a really bad range. Yeah, there's a 50-50 chance it's doing that or that. When we get here, there's a higher probability of that happening because it's happened twice in the past. When we get down to here, there's a higher probability of that happening because this is where the propulsion move started, and every time we've got to it, we've rejected it. Yeah, so that's where you trade from. That's where you trade from. You don't trade from the middle. Hopefully, by the time you get up there, you'll have an RSI extension, or by the time you get down there, you'll have an RSI extension, or you'll have hit ADR, the upside or the downside. This is why I use the indicators, because the indicators tell me that we've had a move. After a move comes a reversion. Whether you can get rid of that, you can get rid of the ADR indicator and just use a line on the chart. These black lines are weekly limits. The blue lines are large bank orders. The purple lines are monthly turning points. So all I'm waiting for is to get somewhere. When we've got somewhere, I'll try and get in the other way because it's already gone that way. Chances are it's not going to continue because it'll be exhausted. But all the trend traders will tell you that that's exactly what you should be doing, getting in there. Because it's going to do that. Might do. There's a 50-50 chance, isn't there? You might as well flip a coin. If the odds are always 50%, why not flip a coin? Better to put the odds in your favor a little bit by taking a trade at a level which has got a higher chance of working. But at the end of the day, it's 50-50, always. S&P today is either going to go up or down. I don't know which. I would suspect down. But having a bias is a very dangerous thing. If I suspect down and I try and keep taking breakouts on this, and all it does all day is get stuck or push up, and then I try and short it again as it pushes up, I'm going to be wrong. You should never have a bias in the market. Oh, but the 20 moving average is going up. Yeah, it's gone up. Why do you think the 20 moving average is going to continue to go up? Because it's already gone up. Why? It's got to turn at some point. Yeah, but it's gone up. Yeah, but it's going down now. No, it's not. Prove it. There's a 50-50 chance it will either go up or down today because it can only do one or two things. It's irrelevant having a bias on anything either, which is why I don't use moving averages. I remove them from the position trader EA because in the market reverse alerts EA, if you go with the trend, you will always be expecting the trend to continue. It won't because there's a 50% probability that it's going to end or stop, pause. It can pause, it can reverse, or it can continue. There's two things that can happen that are in your favor and one thing that will happen that isn't, or the other way around, depending on whether you're a trend trader or a mean reversion trader. So pick one is all you got to do, or pick multiples. You know, this is the thing. I was taught to look at a chart and analyze the chart and see if there's something I think looks good. So right now that looks sideways. I don't really know what to do with it. So I move on. Aussie US is bang in the middle of a range. So I'll move on. Swiss yen is going like a loony upwards. Looks like a good short because it's broken out to the upside. What happens after it breaks out? it pulls back. It's broken out. Where's it going next? Yeah, I'm short. I'm about to take another short. In fact, I'm probably going to take a short now. I hate it when it's bang on the line when I spot it, because that makes me want to just hit the button, but I'm not going to. So yeah, so that looks like a good short because it's gone up. Euro CAD, it's attempted to break out to the upside. Now it's come down. It's near my average. So if I'm not in this, I've got a choice. So the reason it looks good is not because I'm an expert at reading price action or I've got this amazing strategy that means that this has to happen when that happens. The reason this is a good opportunity is because it's moving. Because it's moving, it's likely to continue moving. When it's not moving, it's likely to not continue moving. So we've got movement. So what are you thinking now? You have two things you can be thinking. We're breaking out, which means we're going to continue long. So you're a bull. We've broken out. We've failed. We're back inside the range. So you're a bear. What are the odds of being right? Whichever way you analyze this, you are either right or you are wrong. But there's no strategy on the planet that can tell you where this is going. This is why we have a market. You have to have bulls and you have to have bears, because if the bulls want to buy it, the bears have to sell it to them. If the bears want to sell it, the bulls have to buy it from them. Yeah. So unless you have two different people that have different opinions, this thing is going to flatline. And that never happens, does it? So we only want to trade stuff that's moving, which is why I'm a mean reversion trader. When it's moved, I'll get in. Yeah. But if you're trying to predict when something's going to move, it's impossible. Trade it when it's moved, not when it's about to move. Unless you want to be a breakout trader. But good luck breakout trading in something that just does that 80% of the time. This is broken out. Brilliant. Okay, so I'm going to long it here. Excellent. Now it's coming back. I'm break even. Stop out. Oh, didn't make any money. People that sold it up there did. People that are buying it down here on the breakout. Excellent. This is a great place to buy it. But what happens when it gets up to there? Possibly it's going to be a down leg to come and test this area. It's a failed breakout. Or it's a successful breakout. I don't know what it's going to be, but I can tell you for 100% accuracy, it's either going there or there. 100% guaranteed. By the end of next week, that will be hit or that will be hit. Guaranteed. But don't ask me which one. I don't know. Euro Swiss. I'm short on it, because I think the Swiss franc is going to put in another safe haven run. But if I'm wrong, yeah, the reason this is looking good is because it's moved. So it's moved down very hard. It's pushed back up. I'm looking at this as being a 50% retracement continuation on a Swiss franc safe haven run. If I'm wrong, it's going to come back up here. So I'll place another order there. I'll place another order there. And if it's come all the way back out there without any retracement, what do you think it's going to do? Get out then. Plan. I have no idea which way it's going. I have an inkling because of what's going on with the conflict at the moment, but I wasn't expecting that either. So, you just get in. But the reason you get in is why you make money. If it goes down, I'm going to make money. If it goes up, I'm going to make money. What I'm interested in is something that's on its doing something. Yeah. If it's flatlined and it's not going anywhere, you can't see it, don't trade it. Lovely short opportunity off of a monthly high. Reversal alert, retest, lovely. But if you're a bull, you buy it here. If you're a bear, you sell it there. If you're wrong, you're getting further up. If you're buying it here as a bull and it comes down to here, you buy it again. You wait for that to happen. All you've got. Yeah, you haven't got a clue where it's going. You have got a clue where it's going, but you haven't got a clue which way it's going. Yeah, this is either coming back up into here to retest it and come down, or it's going to be a V-shaped recovery. One of those two things is probably going to happen. If not, we're going to be in a flag type situation where we're going to push back down into these lows, which is what I'm hoping for because I'm short. But if I'm wrong, I'll scale in. I won't scale in there because I'm already in there. But if I'm wrong, we're at all-time highs. So I'll sell it on the breakout. There's my next short. So we'll double top all-time highs. But right now, the reason I'm short and I'm still short is because it's not going anywhere. It hasn't gone anywhere for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. I got into it there expecting that, and it didn't happen. So I'm still in it 2 weeks later because I was wrong. But I'm not worried about it. Just wrong. Temporarily wrong. So basically the flexibility that we have with position trading is a curse at the same time when one wants to nail down a strategy because anything's possible. Yeah. That's a really good analogy. That's a really good explanation of it. You know, this is the thing. You go on YouTube and put in trading strategy. Yeah, you'll be dead before you've watched the videos. Yeah. There's more videos being released every day by people around the world telling you they've got the best trading strategy in the world than there is hours in the day to watch the videos. You haven't got a hope in hell of finding one that works because none of them work and all of them work. It's just everybody's trading incorrectly. Yeah. They're either using a strategy and system hopping because the strategy has a couple of losers and then finding another one which basically does the same thing. All strategies do the three strategies. There's three types of strategy. You've got mean reversion, where you sell after a move and revert to the mean. You've got breakout strategies, where you wait for price to break out of a level and you either take the breakout or you add after the breakout. And you've got trend strategies, which are breakouts that work. That's all the market does. It does this, tries to do that, and either succeeds or fails. So you are either a mean reversion trader, a breakout trader, or a trend trader. There's a million videos being released today on an amazing strategy on how to trade. It's the same one as those three. Go and watch any video, and at the end of the video, you will be able to sit down and you'll be go, that is mean reversion. And if it's mean reversion, you already know how to trade it. You wait for the price to move up, you sell it, you place a stop, and you get out when it comes down. If it goes up, you get off. That's it. If it goes down, you get off. Yeah. You wrap risk around price movement. When it pushes up, you short it. You place that wherever you want to place it. Place it there, place it there, place it there, place it there, place it miles up there if you want to. Doesn't matter. It's a mean reversion strategy. If something's been going like that for ages, you buy the breakout of it. You're a breakout trader. Yeah. So when it breaks out, you place a stop there because it's either going to do that if the breakout's going to work or it's not. If you're a trend trader, you wait for price to push outside and then you buy the pullback of it in the assumption that it will continue. That's a lot more difficult because you can't tell where the pullback's going to be. It's always going to give you a signal at some point that the bears are getting in control, but it might do that. Then it might do that. Then it might do that. And that might be the one. So you'll get stopped out 4 times trying to catch a trend. This is why I don't trend trade, because you cannot accurately get a trend right. Breakout, you can't get it wrong. That's the low. It broke out. Did it work? No. Yes. Both of them. But if you use a stop loss, you will be wrong virtually all the time because you're placing an order in the market that tells the market to get you out when you're wrong. But you could be right an hour later, but you took a loss. If you get into that again and it comes up and stops you out again, and you get into it again and it comes up and stops you out again, what are you doing? Giving the market shed loads of cash. If you'd have placed the short order there and waited for a day and saw whether or not that worked or not, you take a loss of X and you take a result of Y. If Y works out, why not break even and hope that Y is 10 instead of 2? That's where people go wrong because they use a stop loss. There's a billion strategies out there that will try and show you how to get in here. Yep. That is a 3-bar reversal. Brilliant candlestick pattern. Stop loss goes above the high. Your entry is on that candlestick. And if you wanted to get 1 R out of that, 1 R, just one, you got it. Then, if you waited for it to get 1 R and put a break even on it, you got no money. So the best case scenario in that mean reversion, or rather that double top mean reversion strategy there, is 1 R. Or nothing. That's all you got. Yeah, that took a week. It doesn't work. because you'll go, oh, it doesn't work half the time. And if you're trading 4-hour charts, by the time you've realized it doesn't work, you'll have been trading for 6 months. And you'll go, best case scenario, I'm getting 2 hours out of these and I'm stopping out on the pullbacks. Yeah, 6 months of your life's gone. So now you start on YouTube videos again. And by the way, you've got to catch up on 25,000 YouTube videos in the last 6 months that have got new strategies, secret sources that you've never heard before. Sound familiar? I thought you said you have to have balls. You do have to have balls. We have to have bulls and bears. Yeah, bulls and bears. Bulls and bears. This is it, isn't it? You know, I've been sitting in this pound US dollar now for 6 weeks or something. I don't know when I got in. It's not even when I got in. Look, I got in there, 12th of May. Been wrong since the 12th of May, and I'm sitting in 1.7% of drawdown. I've already banked on it, but you know, this is what it's about. You've no idea. If this was a stupid trade in hindsight. If we all had hindsight, we'd never take a stupid trade. But this is absolutely 100% against my strategy. I took a breakout trade. I never take a breakout trade. I always take a mean reversion trade. It's got to have gone somewhere for me to then get into it. And I'm either doing that or I'm doing that. But I'm never doing that on 5-minute charts on stock indices. Yeah, obviously, but not on FX. So I shorted that breakout. And the reason I shorted it was because of fundamental news. We had fundamentals on the pound, which looked like the pound was going to collapse and properly collapse. And it didn't. It mean reverted because good old Mr. Trump destroyed the dollar. So the pound was really, really weak, but the dollar was weaker. Who'd have thought it? But that's why it caught me out. So first entry, second, third, fourth, fifth, took a profit, fifth, sixth. I don't know where it's going next, but look at this whacking great target down here. All of these targets. So that propulsion target gives me a break-even exit. That one makes me a load of money. As long as you've got downside targets, the market has got somewhere to go. When it goes there, I have no idea. We may be up here for 4 weeks. We may be out here on Monday. We could be down here this afternoon. Yeah, it's only 225 ADR. Yeah, it's not far. We're already halfway there. We've done ADR today, so I only want 1 ADR of movement and I'm out. It's just not coming. This is what I was saying earlier. Getting an ADR out of it is like pulling teeth at the moment, isn't it? It's just not interested. It doesn't want to give us an ADR. S&P's broken without me. That was unfortunate. So that was my stop loss. You couldn't get it any more accurate, could you? I've placed the absolute perfect order there. That was my stop loss. That was price. That is the result. Why did I stop out? Because I put an order in the market that said, if you go that way a little bit, take my money and then go. But we've got to have it in this because using high risk. So look at that for an entry though. Just ask Member, he makes 50k in 30 seconds with his strategy. I'm sure he does. How many times does he lose it? This is the thing, you know, maybe I'm old. I would call it wise, but if I wasn't, would I think of him as a trading mentor? Yeah, or not? Yeah. It's just like, this is what we are being pumped full of, this stuff constantly. You know, did you see that? Was that real? Or is he taking the mickey, isn't he? Did you see the amount of indicators on that chart? I think he was taking the mickey, hopefully. But anyway. He drinks Red Bull in a hoodie, for God's sake. You know, this guy is one of 25,000 people that has a strategy. And, you know, there's many of them. I've got lots of them bookmarked in here that basically change their strategy every few months. or every 6 months or every year because it fails. So they do a new one, but they know they need a new one because they don't get the YouTube views, but they don't care if it works or not. It's irrelevant, isn't it? It works in the same way as the other one did. If they like mean reversion, they will give you loads of mean reversion strategies. I've just given you tons today. I've said, buy the high, sell the high there, sell it when the RSI gets up there, sell it when it goes above ADR. There's 3 strategies I've just given you in 3 seconds. They all work. But replace that with an RSI, that RSI with a stochastic, a CCI, a MACD, a rune up, down, or whatever you want to. And there's another, how many did I say? 5 strategies you can trade. Yeah. Add a moving average into it, and I've made a trend strategy for you. Any of them work? Well, they have a 50-50 chance. What we got? Sorry, I can't be any more positive, but if I had the Holy Grail, I wouldn't let you know, because I'd just be sitting on a beach letting the Holy Grail trade away for me. Wouldn't that be nice? I've caught up on the chat. That's good. It is Friday afternoon, so anyway, let's get rid of him. Michigan's come out. Obviously, there's no more news today. Monday next week, we've got no news either. Empire State Manufacturing. So I'm putting together a website for someone at the moment, and part of it is news. And I've just suddenly realised I've missed that out. I'll remind myself of that. Anyway, so Monday, there's no news. We've got 2 rate decisions next week, and CPI. So we've got the Canadian rate. We've got 3 rate decisions next week. Sorry, 3. We've got the Swiss, Canadian, and the yen. And we've got the CPI for the pound as well, so the inflation figures for the pound. So it's a very, very busy week next week. The main thing we need to focus on is obviously this weekend. So whatever you are in today, if it escalates over the weekend with Israel and Iran, bear in mind that Monday could be opening here, or it could be opening up there or something. So just be aware of that. You're better off being flat at the weekend and putting those positions back on. I've taken a Euro Swiss short. If it's a Swiss franc, obviously we've had the safe haven move go in. If that safe haven move gets undone, which most of it already has, worst case scenario, really, I'll be jumping up to there. So that's not really a danger. But if you're in other instruments and you've got exposure on that you could take, so I can bank another 150 on top of today's 242. It makes sense to take that money because I can put that back on. That pound US dollar that is there, I can place that back. So if I take that today and Monday, it's down here, happy days, we're going in my direction. If it's up here, I'll add the thing back on again and bank it another time. So when you've got big situations like we have at the moment with Israel and Iran, and potentially anybody getting involved in this, literally anybody could get involved in this one. Bear in mind the weekend movement, you cannot trade. Banks can't trade. So on Monday, you can have some massive shocks, especially with stocks. Do not hold stock indices over this weekend. Some of these gaps, you've seen the gap from today. We kind of opened down here. So that's a small gap potentially. If the market is going to want to sell off, as I suspect it probably will, gapping down below today's low is very easy. So if we were to sort of sit around here at the end of the day, you're going to gap down a lot. And dependent on, go back and look at when the Russian conflict all kicked off. Some weekend gaps started getting very, very big. And obviously, if you're looking for any long-term opportunities, good old oil is highly likely, if it does kick off, to just keep going for days, many days. So you look at this standard sort of price action on this. It normally moves 18 pips a day. That candle on its own was 47. We've done 350% of ADR today. What's that? 18, 36, 40. Lots of it. I can't work it out. I think it's about 400% of ADR we've done literally in 3 hours. Yeah, normal price action for oil, conflict. Yeah, so this will continue with this level of volatility potentially for days. So obviously, if it all peters out, it's going to just do that, and it will revert back down to that gap. If it doesn't, that's potentially what we're going to see over the next few weeks. So, or at least few days. So be aware of these. There's lots of opportunities out there, but like I said, you can't tell when anything's going to go anywhere. It's going to go where it's going to go. Right. That's all I got for you today. Unfortunate for me, I just got the worst stop out on the planet. That was absolutely terrible. Okay. You cannot get any more wrong than that. That is, if I wanted to show a trade as being a laser targeted sniper exit, that's it. The algos are after me. Right, I'll leave it there. I'll be back on Monday. We'll have a look at what's going on over the weekend. I may give the indices a little bit of a break. We've had a really choppy couple of days, or really choppy week, and I hate trading with a bias, and I would really not want to do anything but short at the moment. So there's an argument if you want to short only for just popping in here and setting that to short, only short, and forget taking any long breakouts, because long breakouts are likely to be false. So for me, I just want to kind of see where the market goes over the next day or two, and just sort of keep the powder dry a little bit, so to speak, just in case we get any huge moves, because this could all unravel very, very fast. We're only sort of 12 hours or so into the news, so we've got potentially some quite shocking escalation on our hands, especially if what Iran said this morning about seeing it as a declaration of war is true, because allies are going to get involved, which means obviously US, UK, Iraq, potentially. I mean, I don't know who Russia's going to be on the side of at the moment. They haven't got any guns left, do they? But anyway, we'll see. All right, so have a good weekend. Thank you very much, David, for that $10. I shall get some boxes. Bubble wrap. That's what it's going on. Yeah, I'll be back on Monday, 8 o'clock. If you need anything, I'll be in Discord or Telegram. Other than that, have a good day, keep safe, and hope things in the Middle East cool off. The world can't handle this conflict, I know. Peace would be good, wouldn't it? Normal market movement. Market structure lives on normal market movement. Erratic market movement is not fun, is it? Anyway, have a good weekend. I'll be back on Monday, and I'll see you then.